And so what you want to do in advance of the deflation of the everything bubble is to own the asset that everything is going to be deflated against, and that is real money, that is gold. The reason that gold is not in a bubble is because everything else is in a bubble in terms of gold. Gold is the stable store of value. Gold is real money. It's a safe haven.
Well, we're going to go back on the gold standard eventually. You know, it's not going to be our decision. It's going to be the market's decision. I think the world is likely to go on the gold standard before we do, even though we still supposedly have a lot of gold, because the US dollar is now the world reserve currency. Before the dollar was the reserve currency, gold was the monetary reserve. So we had a powerful economy, a real wealthy economy, and the dollar was not only backed by gold, but it was convertible into gold. Americans couldn't convert it anymore thanks to FDR, but foreigners, if you had $35 Federal Reserve notes, you would get an ounce of gold. And so what we told all the central banks around the world was, hey, back your currencies with dollars instead of gold, because the dollar is as good as gold, because $35 are 1 ounce of gold. But the difference is, if you have $35, you can buy a US Treasury and earn interest, right? But still have a gold standard, because we got your gold at Fort Knox. And so the world made that deal with us. But of course, once they made that deal, we exploited it, because now all of a sudden we convinced the world to hold treasuries as reserves, to loan the US government money so we could spend more.
And I expect all of those bubbles to pop, the air to come out, but the way I expect them to deflate is not with their dollar price going down, but with the gold price going up. That's how all these bubbles are going to pop. The price of everything is going to crash when expressed in gold and silver. And so what you want to do in advance of the deflation of the everything bubble is to own the asset that everything is going to be deflated against, and that is real money, that is gold and silver.
The world is not just going to anoint some other currency as the king, right? We're not going to have the euro as the reserve currency, or the yen, or the Chinese RMB, none of that, right? We're just going to go back to gold. Gold works as money, and gold is a viable reserve for currency. And that's why a lot of central banks still hold gold, and that's why central banks have been buying gold, is because they are preparing for a return to a gold-based monetary system that works, instead of this fiat system that doesn't, but that principally benefits the United States. The United States benefited because we were the monopolists in the creating of the dollar. We got to print them, and so we got this extraordinary privilege. But in the process, we have hollowed out our economy. So when we lose that privilege, we're going to have a huge price to pay. We are very vulnerable because of, of this system.
Well, because the Federal Reserve is in the market buying treasuries. I think the Federal Reserve now has, $5 trillion of treasuries on its balance sheet. And so the question is, where would interest rates be on treasuries if the Fed had not bought them all? Clearly, if the Fed is this huge buyer, then it's supporting the price. If you take that buyer away, the price of treasuries would have gone down, meaning the yields would have gone up. So you do have the Fed in there. Then you also have, I think, a lot of speculative money that is in the Treasury bond market, not basically because they see real long-term value in holding to maturity and clipping coupons, but because they're able to lever up and borrow money and at a cheaper rate and then buy the treasuries. You get tremendous margin on treasuries. I mean, you get massive leverage if you post treasuries as collateral. So you can create this trade with a lot of leverage. And so I think there's speculative demand in the market that is only there temporarily. I mean, at some point, the market's going to collapse. The same thing's going to happen with the dollar. You can say, well, why is the dollar index still at 90? Why hasn't it crashed? Well, you can keep saying that right up until the day that it does crash. But the momentum is building for the dollar to crash.
But what really happened during the 1960s is we abused that. We really started running big deficits. because we didn't have to have the gold anymore. We could just print money, and everybody was holding on to it. So we had the Great Society, the War on Poverty, Vietnam, the Moon Mission. We had the guns and butter. And we printed all this money. And then we started, our creditors got smart. De Gaulle and France in particular wanted his gold. It's just bullshit. You don't have any, and in fact, prices really started to go up because of all the money we were printing, but the price of gold wasn't going up. All the other prices were going up. And so it was clear that gold was undervalued. And so the world wanted their money. And then we went off the gold standard. Instead of doing the right thing, which would be to devalue the dollar officially to a point that the gold price would make sense, or to allow deflation so that prices would come down back in line with a $35 gold price. We did the worst thing possible. We went off the gold standard, and the price of gold went up to 850. We had all the inflation of the 1970s. We really, had a terrible decade.
In the investment market, where people are moving out of momentum type stocks into value stocks, the same thing is happening now with Bitcoin and gold. People are going to be moving away from fool's gold and buying the real thing. Bitcoin has lost all that momentum, and gold is regaining the center stage because the entire time Bitcoin bubble has been deflating. Gold has been quietly moving higher and higher and higher in obscurity. Not a lot of attention being paid to the gold market. This is the lull before the storm. People are still excited and focused on a bubble that's already popped, and they are missing a bull market that is in its infancy. In fact, somebody the other day had asked me, why is it that every asset out there is in a bubble except gold? And I think a lot of people are asking the same question. Well, the answer is because gold is the money by which everything else is overpriced. The reason that gold is not in a bubble is because everything else is in a bubble in terms of gold. Gold is the stable store of value. Gold is real money. It's a safe haven. And during bubbles and manias, everybody wants to buy the risk assets. That's where they're getting rich, whether it's in stocks, in real estate, in collectibles, or even cryptocurrencies. Whatever people are buying, it's in a bubble in terms of gold.
That your currency is now tied to gold at a particular rate. And obviously that rate is going to be a function of how much gold you have and how much currency is in circulation. But obviously the gold price for the US to return to a gold standard at this point, I don't know if it's 10,000, 15,000, 20,000. I don't know where we have to fix the price of gold to make it work in dollars, but we can do it. But then once you get on a gold standard, you got to stay on a gold standard. That means the budget has to be balanced. And the dollar was not only backed by gold, but it was convertible into gold. Gold works as money, and gold is a viable reserve for currency.
The reason that gold is not in a bubble is because everything else is in a bubble in terms of gold.